Hi, I'm Steve Adubato. Everything you've ever wanted or needed to know about your credit, good credit, bad credit, and how you deal with your credit situation. And we are pleased to welcome Marie Gamble, who is a business development specialist with Jersey Shore Federal Credit Union. I want to thank you very much for joining us, Marie. We were talking right before we got on the air about this whole situation about good and bad credit. First of all, what do you need to do to have really good credit other than just pay your bills on time? Is it that simple?
That is the main thing you have to do. Paying your bills on time is definitely very important, along with not maxing out trade lines that you have open.
Trade lines. So
credit cards, or maybe like a line of credit that you might have, things like that that have a maximum. You don't want to max them out.
Someone says, wait a minute, but I've got the line of credit for $50,000. Why not use the whole thing? Not necessarily a good idea.
No, because your score can start to go down as you're maxing yourself out. So you want to try to keep it below maybe 25% of whatever your maximum availability is. And that definitely helps along with paying your bills on time.
Okay, so the other thing I asked you, because I know a lot of my friends watching right now have some credit situations, you know who you are. So if someone is now identified as having quote unquote bad credit, some of my friends or people who've experienced this say, well, that's it. I'm on some list. They think they're on some list with bad credit and they can't get off. And you said that's not necessarily true.
No. It definitely hurts you if you don't pay things on time, and it affects your credit and how...
Is it a credit score?
Your credit score, along with your credit history, the length of time that you've had your loans or trade lines open, that all impacts your overall appearance to the eyes of the lender, how risky you seem to them if you want to borrow money from them. So if you have had, something happen, issues, it's not the end. You just have to start doing the right things to start correcting the problem.
For example?
Continue to pay things on time. It's also important just to establish a savings account for yourself, an emergency fund.
Why would that matter?
Because you're less likely to charge something if you have an emergency fund for it. The more you have to charge for things that you don't actually have the money for, the more likely you are to overspend and not be able to pay those things back. And if you owe more than what you can actually afford, that's when you can start to get into some trouble.
But you also told us about this other initiative. And by the way, take advantage of the information at the bottom of your screen. You see it there, the Jersey Shore FCU.org, right? Mm-hmm. How about this one? A credit builder loan. Yes. I looked at that and I thought, what is that?
We offer a credit builder loan, and a lot of different institutions do offer types of secured cards or credit builder loans that can help you. Ours is a secured loan.
What does secured mean?
Secured means that there's some sort of collateral. So if you went to purchase an auto loan, that is secured by that vehicle. So our credit builder loan is secured because we hold the funds that we're letting you borrow. So if you want to borrow $1,000, we're actually going to hold that, and it's not going to be released to you until you're making your payments on time with us. So it's called secured because if you stop paying, we still have that money. There was no loss to us. But it goes on your credit report as an installment loan. So if you're paying that on time, that's getting reported to the credit bureau, which either will help you build credit if you don't have any, or help you repair it if you've had some issues.
So that's credit builder loan.
That's the credit builder loan.
Why are you so interested in talking to high school students about financial education? Why is that so important?
Because as a young adult, you're entering the world at 18, and all of a sudden you have all these responsibilities. So you might be going to college, you might be starting work, you need to pay bills, you might want to get a car. Just the real world is happening, and part of that is having a bank account or borrowing money to purchase a car or something like that. So it's really important just to give them the basic tools so that when they go out and they open up a checking account, they understand exactly what that means and the responsibility that they have of using a debit card and only using what's in their account, and starting to establish a credit history for themselves so that they can prepare for their future. So eventually if they want to purchase a car or buy a home or different things like that, they are setting up their foundation in the right direction.
And is it fair to say, Marie, that a lot of people at that age make certain mistakes they have to wind up living with for a long time after that?
Mm-hmm. I think what we saw before and what we still see now is students get student credit cards maybe, and it's a way for an institution to give them a chance to start building their credit history, which is great.
Excuse me for interrupting, but on campus, everywhere you go, it just seems so easy for those students to get their hands on a credit card. So could it be that for a lot of students, they think, I'll get that card,
and I don't
have to have the cash.
They've never had that privilege before, and a lot of times,
Would you call that a privilege?
Being able just to spend money that they don't actually have. So, especially in South Jersey, which is where I'm from, it's very seasonal. So if you're a college student, you may be working in the summers and going to school throughout the fall and the winter. So they don't account for the, that they might not have money throughout the year to pay these things. And they start spending thinking they'll be able to pay it back. But the bill is going to come every month regardless. And then it's interest on top of interest. And before they know it, they possibly could have maxed themselves out or spent too much and not have the money to afford it.
Let's deal with the other end real quick if we could. Seniors are often victims of scams, financial scams, because? Because
they can be vulnerable and they may be dependent upon family members or caregivers because they may be frail or suffering from different health issues and things like that, and they tend to be a little more trusting, and they don't realize all the things that technology can do and all the things that people that are available to them to take advantage of other people.
So you folks actually go out to senior buildings where older people, more mature people are, and you're giving seminars, you're talking to them, you're telling them about the red flags that they should be looking for, the warning signs, right?
Yes. We want to go out and spread the word and take the knowledge that we know and the information that we have and pass it along so that it betters the community that we're working in. And we just try to continue to do that every year as often as we can with whatever centers or employers want to use us, and we come in, there's no charge or anything like that, just to spread that information to them.
It's a great service. Marie Gamble, Business Development Specialist, Jersey Shore Federal Credit Union. I want to thank you for joining us.
Thank you for having me.
Very important.
Yes.
Stay there.
Thanks.
We'll be right back right after this.